Hey everyone, Joseph Hastreiter here with the UW University for Small Business, back with another business and tax tip for you. And one of the things we're going to cover in this video here is what is double taxation. So what double taxation is if you are a C corporation, all right, and there are different types of entities in terms of the IRS. Some are called pass-through entities. A C corporation is not a pass-through entity, and in our video about pass-through entities or S corporations, we'll elaborate on that more. But a C corporation is actually the only business entity that pays taxes itself as a business. Okay, so let's walk through this little example we're going to have for you on the screen here. Let's say you're a C corporation, you have a profit of $20. Okay, now every C corporation with the new tax law that just got passed will pay 21% in income taxes on their C corporation profit. So if this C corporation has a profit of $20 and they pay 21% in taxes, if we round, that means their profit after taxes will be $16. So this C corp will pay income taxes of $4 and then have a profit left over of $16. Now, for a C corporation to distribute or pay out the earnings of the business, it has to pay what's called a dividend. That dividend is then paid to the shareholders that own that C corporation. So for simplicity's sake, let's say that this C corporation is owned by one shareholder. So if that C corporation wants to get that profit out of the business, it's going to pay a dividend of $16 over to the shareholder. Okay, so it's taxed once at the corporate level at that 21% rate, and then when they pay that dividend, it's also then taxed to the individual that receives the dividend. Now, how much does the individual pay in taxes on that dividend? Well, that's all based on like your filing status, for instance, if you're single or married filing joint, and based on what your income is or what tax bracket you fall into. That will then determine what your long-term capital gain tax rate is, and you'll pay that long-term capital gains tax rate on that particular dividend. So again, it's taxed once at the corporate level and once at the individual level, and that's what double taxation is. So hopefully that helps you understand what double taxation is. And again, thank you for joining us for another business and tax tip of the day.